Everyone says the AI bubble is bursting. Here's why they're wrong. Open almost any financial newspaper right now, and you will see the same word repeated over and over: bubble. The AI bubble is bursting. Big tech has overspent. The valuations are insane. The whole thing is about to collapse like a house of cards. And honestly, some of these warnings come from very smart people with very real data. So today, I am going to do something that most channels are too lazy or too biased to do. I am going to take the bubble argument completely seriously, show you exactly where the skeptics are right, and then show you exactly where they are catastrophically wrong. Because the people screaming bubble are confusing two completely different things, and that confusion is going to cost a lot of them an enormous amount of money. Stay until the end, because understanding this difference is one of the most valuable things you can learn about how technology and markets actually work. Let me start by being fair to the skeptics, because they are not idiots. There is a real argument here. The largest technology companies in the world are collectively spending hundreds of billions of dollars on AI infrastructure, data centers, chips, energy. That is a staggering, almost incomprehensible amount of capital. And so far, the actual revenue these investments are generating does not come close to justifying the spending. Stock valuations for anything with the letters A and I attached have soared to levels that, by traditional measures, look genuinely stretched. Some companies with barely any revenue are being valued in the billions purely on AI hype. When you look at those specific facts in isolation, the skeptics have a point. There probably is a financial bubble in parts of the AI market. Some of these valuations are going to come crashing down. Some of these companies are going to fail spectacularly. If you are betting your savings on the most hyped AI stocks expecting them to only go up, you are taking a real risk. So if I am admitting all of that, where exactly are the skeptics wrong? Here is the critical error they are making, and it is the same error that smart people have made at every single technological turning point in history. They are confusing a bubble in the stock market with a failure of the underlying technology. These are two completely different things. And the difference is everything. Let me take you back to the turn of the millennium. The dot-com bubble. It was a time of pure, unadulterated market mania. At the peak, internet companies with no profits, no revenue, and sometimes no actual product were being valued in the billions. It was a gold rush. Investors, gripped by a fear of missing out, threw money at anything with .com in the name. And then, in 2000 and 2001, the party abruptly ended. It all came crashing down. Trillions of dollars in market value evaporated. Hundreds of companies went bankrupt. The skeptics who had been screaming bubble were completely vindicated. They were right. It was a bubble, and it burst spectacularly. But here is the part that the skeptics got catastrophically wrong, and the part that almost everyone forgets. The bursting of the dot-com bubble did not mean the internet was a failure. It did not mean the underlying technology was overhyped nonsense. In fact, the exact opposite was true. The internet went on to become the single most transformative technology of our lifetime. It fundamentally reshaped every industry on Earth, from commerce to communication. It created more wealth than any technology in human history. The bubble bursting did not kill the internet. It simply cleared away the speculative garbage and made room for the real, durable winners to emerge. And who were those real winners? Amazon, Google, companies that survived the crash and went on to become some of the most valuable enterprises that have ever existed. An investor who panicked and declared the internet dead in 2001 didn't just make a bad call, they missed the single greatest wealth creation event of the next 2 decades. This is the pattern that repeats throughout the history of transformative technology. The technology arrives, excitement builds, a financial bubble forms because markets always overshoot in the short term. The bubble bursts, and the speculators get wiped out. The skeptics declare victory and announce that the whole thing was a fraud. And then, quietly, while everyone is distracted by the wreckage, the actual technology keeps advancing, gets adopted across the entire economy, and changes the world far more profoundly than even the optimists predicted. The railroads did this in the 1800s. There was a massive railway investment bubble that burst and ruined thousands of investors. And then railroads went on to completely transform civilization. The bubble and the revolution are not contradictions. They are two sequential stages of the same process. So let's apply this framework directly to AI right now. Is there a financial bubble in certain AI stocks and valuations? Yes, almost certainly. Will some of these overhyped companies crash and burn? Absolutely. Will some investors lose a lot of money betting on the wrong AI plays? Without a doubt. But does any of that mean the underlying technology of artificial intelligence is fake, overhyped, or about to disappear? Absolutely not. That conclusion does not follow at all. The stock market is a short-term voting machine, driven by hype and fear. The technology is a long-term weighing machine, driven by genuine utility and innovation. They are two different things, moving on two different timelines. And here is what the bubble callers are missing while they take their victory lap. AI adoption in the real economy is not slowing down. It is accelerating. Businesses of every size are integrating these tools into their actual operations, from automating customer service to generating marketing copy. Individuals are using them to work faster and build new income streams. The capability of the models keeps improving month after month. None of that stops just because some overvalued stock corrects. In fact, if there is a market correction, it will do exactly what the dot-com crash did. Clear out the hype, punish the speculators, and create an enormous opportunity for the people who understand that the technology itself is real, powerful, and here to stay. So, what should you actually do with this information? 3 things. First, separate the technology from the stock market in your own thinking. If you hear that an AI company's valuation crashed, do not conclude that AI is over. Those are different events. Second, if anything, a period of bubble fear is historically one of the best times to deepen your own skills and position yourself, precisely because everyone else is panicking and stepping back. The dot-com crash was the worst possible time to give up on internet skills. The people who kept building through it captured the next decade. Third, be deeply skeptical of anyone who tells you that a market correction means AI is a fraud. They are making the exact mistake that the internet skeptics made in 2001, and that mistake was one of the most expensive errors in financial history. Here is the honest bottom line, free of both doom and hype, which is what this channel is all about. There may well be a financial bubble in parts of the AI market. It may well correct, and some people are going to get hurt. That part the skeptics get right. But the technology itself, the actual capability of AI to transform how we work, build, and create, is not a bubble. It is a fundamental platform shift. It is real. It is here. And it is going to keep advancing regardless of what the stock market does next quarter. The key takeaway is this. Financial speculation is temporary, but technological revolution is permanent. The people who understand the difference between those two things will look back on this moment, bubble fears and all, the same way smart people look back on the year 2001, as the moment the noise cleared and the real opportunity became obvious to anyone paying attention. That is exactly what this channel exists to help you see, the signal underneath the noise, every single week, without the doom and without the hype. We focus on the builders, the breakthroughs, and the long-term trends that truly matter. If that kind of clear thinking is valuable to you, subscribe and hit the bell right now. And tell me in the comments, do you think we are in an AI bubble? And does it even matter for the long run? I read every single one. See you in the next video. Use these exact production settings. Dark cinematic financial tech aesthetic with dark backgrounds and teal and blue accents. No human presenter or avatar on screen. Smooth professional transitions with varied pacing, subtle low-volume, tense then hopeful background music never louder than the voiceover. Display key terms as bold text overlays whenever mentioned such as bubble, the skeptics are right, the critical error, .com 2000, Amazon and Google survived, the railroad bubble, technology versus stock price, what you should do. Use realistic footage showing stock market charts crashing and recovering. News headlines about AI bubble, data centers, historical .com era imagery, vintage railroad imagery, people working with AI tools, confident investors, clean white bold sans serif font for all text overlays on dark background. 16 by 9 horizontal format at 1080p optimized for YouTube. Confident, authoritative measured English male voiceover with natural varied pacing. Video length 11 minutes, not shorter. We start at the edge of where computation meets the world. Inside, the machines hum, training models at scale. And outside, markets react in real time. A split view. Technology and price, side by side. Labels and questions that shape the conversation. A consistent visual language at every scale.